I can close it in 15 days. And he's like, you can close it in 15 days? I said, I can close it in 15 days. He's like, a VA loan. I said, yes. He said, but that's just like cash. And I said, I know. Just give us the opportunity. Our guy is already been qualified. I said, have you checked your debt ratios on your conventional loan? And he was like, well, no. And I said, check your debt ratios because rates have went up.
What about having that brokerage model is it that you like? What ultimately made you switch?
Because they get better pricing and it's really quick turn times, which is why I've been able to close my loans or purchases in anywhere from 10 to 15 days. And that's going to be key, is having an investor that can do a roll down option. If your ratio is too high and you're having all these locks and they're not going through, it's costing money because see, they're reserving that money for the client, right? Mm-hmm. So when those don't go through, they've already reserved that money and it's got to go back in. It does actually affect pricing. Definitely make sure that the client gets the best of the best.
Hey everybody, how's it going? Jason Walters here. Thank you for joining us. Today we have a special guest, and I'm going to butcher your last name, so I'm going to let you introduce yourself. DeeDee, tell us a little bit about yourself and where you're from.
My name is DeeDee Furagganan, and I'm with Homeplus Mortgage. A little bit about myself. I have 3 children. One of them is 22. She's already married. And I have a 17-year-old and a almost 5-year-old. I love working with people. One of my passions is helping people. So it's one of the things that I just love doing, helping people. And then also I just recently purchased a home in Lake Arrowhead. Love being outdoors. Yeah. So I'm turning that one into a little vacation / Airbnb.
Airbnb, that's what I was going to say.
Yeah.
That's awesome. Awesome. So where do you work and how long you been there?
I'm with Homeplus Mortgage. I just recently switched over in May. I've been in the mortgage industry for about 26 years. Prior to this, I was with Capital Mortgage for about 16 years. So pretty long time. I've been through the ups and downs of the mortgage industry. Mm-hmm.
Yeah, I didn't even, you know what? I didn't realize that you made the switch. You keep
Really?
saying it, but I keep thinking, oh, she's with Capital Mortgage Services.
Right.
So what made you change to where is it? Where did you work?
Homeplus Mortgage.
So what made you switch from Capital Mortgage Services to Homeplus?
We went through a merger, like a lot of companies. They went through a merger, and they went from being a correspondent means direct lender. So we were correspondent, meaning we were a direct lender / we could also broker. So we were both. Now, they went through a merger back in August of last year, and they were only a direct lender. So it made it very difficult to be able to fit people outside of that box. It's kind of the same with going to the big banks. They have this little box, and if you don't fit in it, it just doesn't work, right? So I basically started looking for somewhere that worked identical to CMS because CMS had it down to a T. And I found Homeplus. They work identical. They are a direct lender, meaning they're correspondent with the bank. And then they also have 50 banks that they broker out. It was literally almost identical to the previous before CMS went through the merger.
Nice. So tell us a little bit more. There's probably some people that don't understand what that means.
Yes.
Tell us, like you said, that Capital Mortgage Services went to strictly being a direct lender.
Yes.
What about having that brokerage model is it that you like, and what ultimately made you switch? What does that entail for a client?
Well, it's the best way to put it is that when you have a little box and you have these guidelines, you have to get your client to fit in that little box. So not everybody fits in that box. Some people have different employment histories. You might need a bank statement program for somebody. So you have to be able to go outside, and different lenders have different guidelines, different things that they're going to overlay on. And overlay means that above Fannie or Freddie guidelines, they're basically going to add that in. So the problem with being direct with just one bank is that you have that one set of rules. And if they don't want to do something, you don't have anywhere else to go. If you are a broker, then you can say, okay, this didn't work, that didn't fit. Let me restructure this and send it here, or let me try this program over here at this bank. And you have options. What happens is when you are a direct lender and you have that little box, instead of trying to fit the client into that little box, by being a broker, you can put them and you can tailor the program or what you're trying to put the client into. And having different options with the broker helps you be able to help people fit into the program instead of trying to make the client fit into this little program box.
Right. So instead of the client having to go to this bank and then they don't get approved, and they have to
Right.
take their file and they got to go to this bank.
Right.
They could just go to like a one-stop shop, and
Right.
then you can try to qualify them with all the banks that you work with, and until one of them works for their particular situation. Is that correct?
Exactly. Yes. And being correspondent, meaning that we're direct with this one bank, we get great pricing. Pretty much their turn times are really fast. So, of course, ordinarily, I'm always going to try to put them in that program, the correspondent program. A lot of the times, though, they don't fit in that little box. The direct lender that we do have, the correspondent line that we use, they don't have any overlays, though. So if it's Fannie and Freddie, there's no overlays on top of it, meaning that they're not going to say, okay, we only go up to 45% debt ratio. If you get a DU or an LP accept, then, and let's say it's 49.99 back in debt ratio, they'll honor it because whatever Fannie or Freddie approve, they'll go along with it. So I try to push everybody into that because they get better pricing and it's really quick turn times, which is why I've been able to close my loans or purchases in anywhere from 10 to 15 days. And the other one with the broker is if somebody doesn't fit that profile, then I have those other options for them as well.
Nice, nice. So I know you mentioned that you went to the new company because they would still broker the loans. Is there anything else unique about the lender that you're working with now that maybe some of the other lenders don't offer?
They're really fast. I have a processor. I actually got a processor that has been in the business also for 25 years, and she's amazingly fast. That leaves me more time to be with my clients and my agents. So yeah, that's one of the unique things. I got a rock star team. Usually you'll have a good loan officer, and then the processors maybe so, but she is amazing, and the whole support that I have there is amazing. Another unique thing is, I mean, there's a couple of places that offer them. I used to do them before where I was at, but USDA loans, USDA are rural loans. A lot of people don't know about them. I do know how to do USDA, and those are programs that are out in Piru, Fillmore, kind of the outskirts of Ventura. Like if it's kind of rural and Ojai and Oakview, then you can do 100% financing with no MI. And not a lot of people know how to run that system. So it runs a completely different system. But yeah, that's something unique is that we do offer that. And then we have, of course, the 3% down conventional, which is the home possible and the home ready.
Oh, what is that? Tell us
That,
about that.
yeah, that's okay. So they just recently increased those income limits. So there's income limits on it, and before it was about 78,000, so nobody fit in that box. A couple of years ago, they had no income requirements, so everybody got put into the 3% down conventional. And what it is it's called Home Possible with Freddie, and Home Ready with Fannie, and it's 3% down. It's a straight conventional loan. The MI is discounted, and the interest rates are discounted. Now they have to fit an income requirement now. Back in the day, they didn't. They put it so low a couple of years ago that nobody fit in it. It was 78,000, and I mean our prices are going up, so of course they didn't catch up with that part of it. But they just recently increased them, so now I believe they're about 98 in our county. So we do have an opportunity with those loans again.
Well, you almost have to make 98,000 at a minimum in order to purchase
Minimum.
any property
That's true.
these
That is
days.
true. Yes, absolutely true.
So, how has business been over, let's say, the last month or two since the rates changed? Have you noticed anything different with your business?
Um, Anything different? I have noticed that there's not as much competition, which is good for our clients. I have noticed that it has slowed down. Basically, what they're doing to slow down inflation is actually helping by increasing the rates. So it has helped. I have seen that we're up against maybe 3 4 people instead of 30 40 people.
Hmm, hmm.
So it's a lot nicer when you only have to go up against 3 other people as opposed to 30 or 40.
Did,
So
did a lot of your borrowers get priced out when the interest rates
no,
went up?
actually, they didn't. I didn't have that. Reason being is I follow MBS Highway, which is a loan officer. It's kind of I don't know if you're familiar with Barry Habib, but I follow him, and every morning they do like a market watch. So they go into detail on what's happening in the market, how rates are doing. They have the lock alerts. So I get on my phone if their rates are going to change, we're going to have a shift. The news basically tells us what's happening and how we should, if we need to float or if we need to hurry up and lock, because it's been so volatile every single time. our clients go into escrow and we have a verbal that they're going to get accepted, I lock them right away. That way we're not risking anything changing. And then another thing that I've done is set up a group text message with their client and the agent. So when they're looking at properties, I'll pull up what the rates are, quote them what the payment is before they even go out and make an offer on that property, so nobody's wasting their time and we don't have to worry about having any issues later.
Nice, nice. And you could totally tell you're a pro. I've been selling for almost 19 years, and I'm not understanding all of the lingo. What is a float?
When you float, that means that let's say you're in escrow and you're waiting and not locking your loan. So you're basically waiting to see how the market does. When the rates were really low and we were kind of just, there wasn't a lot of shift or movement changes that were really fast. So it was okay to float. Super volatile right now, meaning within, minutes, it could just shift. The market could shift. So we are locking everybody. I'm locking everybody that's in a purchase right away. So the moment that I have a verbal, we're locking. That way there's no change in the payments. But a float just means that you're not locking. You're kind of just chilling, waiting for the market and see if you want to lock your rate today or maybe tomorrow.
Yeah, which is super risky right
Very,
now.
very.
Right now, the rates. The rates were up over 6, and they are down now, right?
Yes, actually, I haven't been in the sixes yet. That's another unique thing about us. We're super aggressively priced. One of the nice things about working with Homeplus is that there's no additional fees. I mean, it's pretty much just, the pricing is really, really competitive. So I haven't been in the sixes yet. Right now, I just quoted a conventional with a 720 FICO score, and it was about a 5.375. So we're
Nice.
still in the fives. Yeah.
Yeah, that's a good rate.
Right.
So, how long can you lock for, or how long do you recommend locking for?
Well, because we're doing fast closes, what I'm doing is I get 5 days for free. So I usually do like a 22-day lock with 5 days for free. So that's 27. Unless we have a 30-day escrow, then I'm doing a 30 and then I have 5 days. But I can lock up to 60 days. The problem is that you don't want to lock that long. Things happen, of course. So, and everybody wants a quick sale right now. So I'm not really seeing a problem with locking. I'm not locking anything over 30 days.
So, let me make sure I understand this correctly, because I don't. So let's say you lock in at like 5.5. Okay. So what happens if during that lock your rate drops?
If your rate drops, like if the interest rates lock on everywhere else, right?
Yeah, yeah. Let's say you're locked in at a higher rate than the current interest rate when it's
Right.
getting close to closing time.
I have an investor that actually does a float down policy or a roll down option, which is really cool. And what that does is when that was happening, when the rates were really low, and that's what was happening is the rates were just dropping so fast. So that bank in particular, I have that bank also where I'm at now, and I'll just broker it there. We really haven't had to worry about that because they've been going up. But when that starts to happen, which, on MBS Highway, Barry Habib has said, of course, that we're headed towards another recession, which would mean the rates are going to drop. And that's going to be key, is having an investor that can do a roll down option. And that just means that you can roll down to the lower rate and take advantage of that with no cost.
At no cost.
Mm-hmm.
I like that. I like
know.
that. That makes a
Yeah.
lot of sense. You know what? I have heard that name, Harry Habib.
Habib? Yeah.
Yeah,
Mm-hmm.
yeah. He must be popular.
He is. He's very, very awesome. He's super smart. The last recession we had in 2020 when COVID hit, he was the one who called it then. And he's like, we're headed towards another one. It's happening. So great
Barry
to meet you.
Habib.
Yeah, Barry Habib. Yes.
Yeah,
Look him up. He's super,
maybe I
super
should start listening to
You
him
should. It's really cool. It's very
his
informative because he
notifications.
talks about the market too, like on what housing prices and, when everybody was like, oh no, I don't want to pay 20, 40 above. And he was like, well, wait, what's the cost of waiting though? How much appreciation are you going to get? You know what I mean? There's so many tools on there.
And who's he with?
It's MBS Highway.
MBS Highway.
That's right. hmm I think you can log in and you can do like a free trial too.
Nice, nice.
Mhm.
How many different options? How many different brokers? How many different people can you actually send that loan to?
Well, you want to be careful to not, you don't want to send them all at once. So, because it takes work to put a file together and send it out. The key is, as a loan officer, to know your guidelines and know what this bank does and what does this bank do. So, to send disclosures out and just send them all to random, banks, what happens is those rate locks cost money, meaning that they're securing those funds for that client, right? So you can't lock with everybody. So as an experienced loan officer, you have to know what guidelines they are going to be okay with, that you send it there when you lock it, because you can't just lock it everywhere and send it. When you start burning locks, it starts costing you money, and then your
Mm.
rates go up. So
Start burning locks.
yeah, yeah, you don't
That's a
want to
new one
do
for me
that.
too.
Yeah. Burning them meaning you just lock a loan and it doesn't go there. If they don't follow through, then that all hurts your pricing. So you do have to know what you're doing and not just throw loans in there and hope that like spaghetti on the wall sticks.
Yeah. So
You
you
got
as a loan officer would get penalized for submitting deals to these brokers and not following through
As a company, yes. What
as a
happens
company?
is yeah, as a company, they track your kind of your when you put loans through and they actually go through. If your ratio is too high and you're having all these locks and they're not going through, it's costing money, because see, they're reserving that money for the client, right? So when
Mm-hmm.
those don't go through, they've already reserved that money and it's got to go back in. So it does actually affect the pricing.
Oh, wow.
Hmm.
Wow. So you got to be careful.
You got to be careful. Yeah. Hmm.
So when you get a file, like let's say I
Hmm.
have a new borrower for you, I send them over.
Yeah.
So after looking at the file, you pretty much know exactly like where you're going to send that particular borrower.
Yes, once I look at the client, and if it's a easy FICO W-2, pretty much fits within the correspondent or the direct line, I would send him there because he's going to get the best pricing. Um, and then if it's kind of a sticky situation, I mean, I can also do a bank statement loan with that direct correspondent line as well. So
Mm.
that's another option too, is the bank statement program. But yeah, pretty much when I look at it, I know where I'm going to send it. I know who can do what and where it's going to fit. Now, let's say that they go and they look at a property and the pricing is a lot better with this other bank today now, and they do the exact same thing. Well, of course, if we have the time and it's not going to affect the timelines, then I would send it there so that
Nice,
the
nice,
client can get the better, pricing. So definitely make sure that the client gets the best of the best.
nice, nice. I love
Mhm.
that. So tell us, what exactly do you need from a borrower? One of the issues that we have is convincing the borrower to go ahead and get that pre-approval before we start shopping.
Right.
That's one of the big ones. So
Yeah.
what is like the minimum you need from a borrower in order to pretty much know whether or not you're going to be able to get them approved?
At least the W-2s. I usually ask them for the last 2 years. Sometimes they don't have the 2 years. The 2 years is important. And if they don't have the second year of the W-2, at least the last paycheck stub in 2021 will help us. What we're looking for is the overtime or the bonus, anything that we can use that might need to be 2 years averaged. We need to look at all that so we can determine how we're going to break down income. So W-2s, at least 2 years. If worst case scenario, at least the last year's, two most recent paycheck stubs, or at least the most recent paycheck stub, and then the last paycheck stub in 2021 would be ideal, and then the last 2 months of their bank statements, so we can take a look at their reserves, and then a copy of their driver's license. That's kind of like the bare minimum right there.
Now, if they've already been pre-approved with a different lender,
Hmm.
and they want to shop around,
Right.
do you have to pull their credit
No, we don't
again?
have to pull their credit. Mm-mm. So what we would do is we would have them just tell me what their FICO score is, their middle FICO score. Now, of course, when I'm giving them a quote, because we're giving them a quote based on that FICO score. If something's changed since then I can't issue a pre-approval without it. So what I usually tell my clients is my if I have an agent that says they want to get a second opinion, and I told them that you have shorter contingencies. So that's another unique thing about us, is that I'm doing my contingencies 3 days for loan, 5, 7 days for appraisal. So that helps them to their offer to stand out, of course.
Now, you said 3 days for the loan.
Yeah.
How,
I just
how are you
turned,
doing it that fast? Because you already
I
have
know.
them
And that's,
approved.
that's what I'm saying, is that, look, correspondent, I had one yesterday. The guy was looking in LA, and the agent, she's a newer agent, and she forgot to tell me that they went into escrow a week ago. So I quickly called the listing agent and said, I just found out we got accepted and we were in escrow last week. And she's like, what? Yes. So I had to race, hurry up. We submitted it yesterday morning. We already have our approval now. So it's that quick.
One day. Now, is that because you collect so much information from them in the beginning?
Well, what happens is because we have to get updated paycheck stubs and W-2s. So yes, I get everything up front, any letters of explanations, and that means like Did they apply somewhere, and you have to explain if they've taken out any new credit, any
Mhm.
previous addresses. I literally put a file together so that the underwriter has no questions. So I do everything up front. That way it just slides through. It's fast, and we don't maybe get 2-3 conditions, and we're done.
So if I send you someone today,
Yes.
how fast or how if they have all their paperwork, how long do you think it takes before you can either spit out a pre-approval and or already get them approved?
Well, usually once they send in their income documents, as long as I don't have a client with me at that moment, the first thing I'm going to do is, of course, break down the income, run it, everything that I get. I run it through DU, which is the system that we use for underwriting through Fannie Mae, or LP, which is the one through Freddie Mac. And once I get that approval on it, I issue the pre-approval right away. So, and another thing that we do that's unique, Jason, is that we can actually have it full blown approved as well. Now that it's not as busy and it's slowed down a little bit, I've been turning my files in to the underwriter on to be determined properties, so we call them TBDs,
Hmm.
and they're full blown underwritten and already approved. So that also helps the client stick out on their offer as well. Just trying to think of different ways of helping the client get their offer accepted.
You mentioned 5 to 7 days for appraisal. How do you get the appraisals turned around that fast?
I know, I know. No, we've got it down. Like as I'm telling you, the system we got it down. So the AMC that we use for our appraisals, they're fast. They know that the faster that they are, the faster we get our offers accepted, and it's just been helping us get our offers accepted, and that's what makes us stand out. I mean, just today I already got the approval. I ordered the appraisal, and he already went out to the property, and I will have it back in 2 days.
That's quick. That's
Yeah.
quick. So
hmm
what's the fastest, or average fastest that you've been able to close a property here, in this last market?
I mean, right now I'm averaging my clear to closes in 7 days. My first one that I had with Homeplus was 6 days. I was clear to close in 6 days. In 6 days, it was done. I
You
literally had, I was
you
done.
weren't you weren't closing homes in 6 days. Are you serious?
No, we had to wait because the seller wasn't ready. They said we need 30 days, and I said that's
But
fine, but we're
so
ready.
it's a vacant property. I send you a client
Yes.
tomorrow
Uh-huh.
with all of their packet. We're
Mhm.
writing an offer. What's tomorrow? Tuesday. We're writing an offer on Wednesday.
Right.
We could close in
10,
7 days,
10 days for
ten
sure. I mean,
days.
I've had them. I even had a VA, and everybody. If you look on my Instagram, I had one that it was a VA offer, and they had a conventional offer that we were up against, and they were like, "Well, you guys need to come up in price. They're higher." And I said, "Well, that's fine, but our guy's a VA. Your seller's a VA. That would be nice to go from VA to VA, of course, and I can close it in 15 days." And he's like, "You can close it in 15 days?" I said, "I can close it in 15 days." He's like, "A VA loan?" I said, "Yes." He said, "But that's just like cash." And I said, "I know. Just give us the opportunity. Our guy is already been qualified." I said, "Have you checked your debt ratios on your conventional loan?" And he was like, "Well, no." And I said, "Check your debt ratios because rates have went up." See, the difference is that I check my interest rates daily to make sure that we're not going to have a debt ratio problem. I have a little bit of wiggle room. And if you accept our offer, I can lock him in right now and this loan's secure. So they ended up accepting our offer, and that other offer was $10,000 higher than ours because of a guaranteed fast close in 15 days, and we literally closed it in 15 days. And
Go,
he was
DeeDee.
so blown. He was like, "I can't believe it."
That's awesome. For everyone that's listening, please let us know how can they get a hold of you if they have more questions. Obviously, if they want to get a loan, and exactly where is Home Plus located? Where are you out of?
Yeah, Homeplus, our headquarters is in San Diego, so that's where the actual main office is. I'm actually in the process of getting an office set up here in either Oxnard or Ventura, and that's what I was trying to figure out. But they are the headquarters is in San Diego, but now, as you know, everything is pretty much virtual. So, um, I'm that hasn't stopped me or slowed me down at all. And then if they wanted to get a hold of me, I have a digital card. My phone number is 805-844-2449. And I've got an Instagram and Facebook with DeeDee Home Loans. So those are the best ways to get a hold of me.
Well, awesome, awesome. She can broker out your loan. She has a lot of different options to ensure you have the best program and the best rates. And what's truly blowing my mind is she can do deals in 7 to 10 days. Now, that
Right,
would be a huge benefit for some of the borrowers or some of the buyers that we work with
right,
in order to get our offers accepted. We are seeing less competition,
right.
so only a couple offers, if
Right.
any. You know, on a lot of the properties, still no offers, which is fantastic. You
Yeah,
know, we've been fighting over the last year or two to get our offers accepted, but it's a lot easier now.
it is.
Um, but still, if you have low down payment, um, it's definitely going to help you if you can close in lightning speed. Sorry, DeeDee, is there anything else you want to let everyone know that's watching? Anything, final thoughts or anything you want to say to them?
No, no, just give me a call. I mean, if you're having a problem getting your offer accepted or just finding yourself with questions, that's the most important part is to get pre-approved. I've had clients come to me that had no idea what their payments were and they were looking at properties. I've had clients that have a DU with an approval and the income wasn't done right by the loan officer. That's actually something I want to talk about really quick. So,
Oh,
and I'm not trying to take any, good about the DU. So the DU is amazing. It's an amazing tool that we use. However, if you don't know how to break down income and you just plug in $17,000 and the client really makes 11, yeah, you'll get an approval because you put in there that the income's 17,000, right? But when that underwriter takes a look at it and if that loan officer does not know their income guidelines, you're in trouble because now changing it to 11 could be a not approve eligible. So it's really important that you work with somebody who is experienced. That is basically something that I've been seeing a lot recently. And I've had to try to scramble and restructure and instead of paying that much down, pay this off. So I am good at that though too. So if somebody does come to me with that problem, I can usually try to fix that problem and help them figure out a way to make it work.
give us an example of a time that you had to save a deal in the 11th hour because another lender couldn't get it done and the client was already in escrow getting ready to close. I know you've had some of these, right?
I have definitely, most definitely. That's happened quite a bit. The most recent one, though, I had an agent that had been looking with the guy for a whole year. Okay, so sometimes it's not great news. Sometimes it's I got to give the real news. And a whole year, Jason, they were looking for a property at $750,000. So when I got those income docs, because all of a sudden the loan officer was not able to provide a pre-approval, and he was dodging the agent. So can you look at it? Because I saw that yes, of course. I'm like, oh no, he doesn't qualify for 750. He's more like 500, 550. And she was like, what? So a whole year wasted. The client was looking at all these properties, finally found the one, was not able to put an offer because he was not approve eligible. And that's the one that the income was put in at 17,000 and it really wasn't that income. So
Wow.
that one was
Wow.
a
Wow.
terrible one. Yeah. But the VA guy, he had put in his offer on a couple of different houses. He was kind of heartbroken. He didn't want to look anymore. He was kind of done. And then I got him, and the agent finally told him, "Well, work with DeeDee. Just give her one chance." And we got one chance, and we got him in off escrow, and we closed in 15 days. Um, but there was also one in particular. Let's see. There was this one that they came to me and it's another situation that I told them it's not approve eligible and they put an offer on another property and I had the agent also say, hey, can you cross prequal this? And I was like, sure. And I was like, oh, this guy just put an offer on another property and he still doesn't qualify. And I worked with them for a whole year. That agent literally turned over and said, you know what, are you willing to work with him and help him get to where he needs to be? He's a veteran. And I said, absolutely. So we worked on it a whole year. We had him add some stuff. He added some authorized users. He paid off some debt. And then he got a new job with more income. And then the year later, he purchased the home. We went into escrow on his first one that he wanted. And, end of the story. Happy ending.
Awesome, awesome, awesome.
Yeah.
So agents out there that are listening, and also buyers, be careful on who you're working with. Don't go looking at properties for a whole year that you
Right.
can't qualify for, because
Exactly.
who wants to waste a whole year of their life?
I
That must have been
know.
a stressful
Absolutely.
situation.
Yeah.
How are you mentioned able to get their credit up? So when you have borrowers that come through and they don't qualify because their FICO score, or what do you recommend, or what have you been doing in order to get their score to raise?
So we have something through our credit bureau and it's called Credit Assure. And it's a program that says, let's say that there's an opportunity for them to increase their score 30, 40, 50 points. Sometimes they only need 1 point. Let's say they're 699 and they're going to get a lot better pricing at 700. Run it through the little simulator. It'll tell us what he needs to do, he or she needs to do. They do that. We do a rescore. It only takes 3 days. And that's all. I mean, that's at no cost to the client. So that's something that we cover to help them get that better interest rate or to qualify for something more. Because that could also trigger DU to have an approval just by being at a 700 FICO score as opposed to a 600. So that, or if there's no possibility for that, because I do have experience in, letting the clients know what secured cards they should try to take. I coach them on how much they should be utilizing on it and to not overutilize it so that we can get at least their score to increase if there's no possibility with the credit reassure.
I love that. And what's the highest you've ever been able to get? How many points have you been able to raise someone's credit score in, let's say, a specific amount of time?
60 points. I remember that was the highest one, was 60 points.
60 points. How long did that take?
And it was it was only 3 days. So what they had to do was he had to call. I remember this one because it's a friend and he's a veteran. And it was literally a house that they wanted to move into in Camarillo. It was the perfect neighborhood, but his FICO score was too low and I couldn't get an approval. So we did the rescore. It was 60 points. He had to remove himself as an authorized user on a card. He had to pay down 2 small debts. And within 3 days, we had the new score. And it didn't stop us because, the agent knew that we needed to get his score up. So I'm always transparent. I'm always crystal clear on what we're doing. I don't like to do that to go into escrow, but that was about 2 years ago. And it wasn't as busy as it was or crazy now. So the listing agent was like, okay, I'll give you 3 days to get that score up. And we did. And we got it. And they went into escrow and he got his home. And I've already refinanced him into a loan that paid off all of his debt. And that's part of the job that I love,
60 points. That's awesome.
Mm-hmm. That's a lot.
That's worth a lot of money.
3 days. Yes, I know. Mm-hmm.
How much do you think that saves in a payment per month?
In a payment, well, it was more of a cost because the rate we needed to have was a certain interest rate, right? So it was either going to cost $14,000 to get that rate for him, which is high cost, or $2,000. So I mean, $12,000 savings is a lot of money, and the rate had to stay at a certain rate in order for him to be comfortable with his payments. So we made it happen by him paying that stuff down and removing himself as an authorized user, and it was just a win-win. Yeah, it was.
Awesome job.
Thank you.
One last question for you. What about self-employed people? I know that that's a little more difficult. So do you work with a lot of self-employed people?
I do.
What's the difference? And
that was the person that was looking for a 750 house. See, the problem is that the loan officer didn't know how to break down income. So when you get into S corps, corporations, Schedule Cs, there's things you can add back or add back to the income. So if you don't know what you're doing, then you could potentially put your client in a really big, bad situation. So we have the bank statement program as well, direct. So that is huge for our self-employed people. To have the bank statement program. So we average 12 months to 24 months. Of course, if they average 24 months, they get a better interest rate. And if it's 12 months, the rate's a little bit higher. So usually in those situations, I'll help them to get into something knowing that it's kind of a Band-Aid loan and they need to get their taxes done and, do the stuff they need to do so that they can then refinance and get the lower interest rate.
Awesome. Well, DeeDee, she definitely knows her stuff. Thank you so much for joining us. Thank you so much for all the great information. Once again, if someone wants to reach out to you to get help with a home loan, what's the best way to give you a call on the phone?
Yep. Call on the phone or email. So it's 805-844-2449. And I'm with Homeplus Mortgage. So it's DeeDee. It's DeeDeef, like for Furagganan. Oh yeah, I didn't say my last name, Furagganan. So DeeDeef at homeplusmortgage.com.
Awesome. Well, thank you so much, DeeDee. It's been a pleasure.
Thank you.
And I will hope to send some people your way. And
Awesome.
Hopefully we can do some more deals together this year.
Sounds good. Thanks, Jason. Always a pleasure.
All right. Thank you.